Hey guys, good morning. Quick video. Yesterday I did very little trading. It's obviously a Monday, and most of the guys that have been with me for a while know that I don't really do much on Monday in the morning, maybe a little bit, and then come back in the afternoon. I'm on mobile, taking care of other business, but we've been using the 30 SMA, and I want to talk about time. Time is really important in the market. We always give, you guys know me, 2 or 3 days to make a correction reverse. The technical damage, you want to see it change after 2 or 3 days. So under certain SMAs that we use, here's 3 closes under. I would have been out of the SPY SP if I was long this ETF on this third day back in March 23rd. You can look at it a couple ways. It would have saved me from this decline, or I could have purchased it here if I saw this as a support area. I'd have to look at some different moving averages, but here's the retest. You can say, wow, Henry, you sold on the third day there around 233.75, but we got back up to, 236. You left money on the table. That's true, but this is going to keep me safe. I'll never get hit by a long-term change in direction or a bear market using this parameter. You can use a longer-term parameter too, but in a shorter time frame, the 30 has been working great for SPY, so we'll continue to use it. There's other trend lines that we can use too for momentum. I do see an 8 SMA. I also use a 480 MA for momentum. You can see how we held along this area in the 8 SMA. We dropped below and here above. So it's going to get a lot of ins and outs, but it kind of keeps you, from this breakout point. You have a touch here, you stay above it, close above it, close above it. Here's a tail through it. Doesn't even matter. Close above it. And here's where things kind of get dicey. Like we said, we give it 2 days under, maybe 3 at most, before we kind of say, hey, I need to cut half my portfolio here to save me from any bigger declines. And then here you have the cross above the 80 MA, the break below. Once again, 2 days under, and then you're right back above it to repair it. So we don't go crazy when we break the 30. If we have some stocks that we feel like we want to take profits in and hold some, this is the perfect time to do it. It just protects us from longer term downtrends. We'll never get burned doing that. And oddly enough, if you zoom in on this, you can see a couple different things here. We always run the trend line. This is a little bit sloppy here from lower candle to lower candle. And you can see how this lines up nicely with the top of the May 17th and then the bottom of the May 22nd. So we can talk about the market all we want, overbought. Couple things really quick. It's very rare that you get a move like this down on this much volume, followed by another move of the same or equal without some type of news event. So, the bombing over there, sadly enough, we're getting desensitized. The bombing in Manchester at the Ariana Grande concert's not going to do it. I think it's going to take something more economically fundamental or a change in psychology, because right now the psychology is getting more and more and more ingrained that you buy every dip, and that's a scary philosophy when you look at it from a longer term perspective should things change in the market. But for now it's working, and that's going to continue to be the protocol for the bulls. And the bears are just getting so scared here. They're just, they can't get any traction, and if they follow things down, they're getting burned on the way back up. So here's kind of a momentum trend line here. It obviously also lines up with this 8 SMA. We could look at a couple things too, really. Number one, if you like using Bollinger Bands, this line also coincidentally lines right up with the mid-Bollinger Band. And we've crossed above that. The volume was really low. Volume was low in everything. I was looking at SVXY late yesterday. I didn't do a trade in it. You can stay long. SVXY looks a little stretched here. I'm going to go look and see where the channels end. It's pushed through most of the channels that we were looking at. It's been really a strong rebound. But funny how this lines right up with the 30, lines right up with the mid-Bollinger Band. A lot of these things are working for SPY. So the configuration of the SPY chart is probably one of the easier ones for us to look at and kind of determine where we need to be cautious. Set that off to the side if you're trading stocks. You can stay long stuff like Apple. The strongest stuff's always going to do well with these continuation moves. And I think we have a MACD cross that hasn't actually had a touch yet. So another reason to think there's maybe a little bit more room to the upside. And let's take a look at that really quick. These are simple charts. Remember, we're using trade architects. So a little bit of a gap there, some more room. We had a sharp sell-off here, and it's kind of taken the same shape. Can we curl up and then continue to go lower? Probably. But there's a lot of momentum behind this here. Interesting volume here on the third day. Has no follow-through volume. So given that the move was a positive move on little volume, to me tells me it wasn't that there was a lot of buyers, that the sellers really stepped aside here and they're getting scared here, and the guys that are long stocks don't want to sell, and they feel like they're going to give up profits too soon. And the bears just really go into hibernation here, and they're tired of getting burned. So it's just freewheel buying without a lot of resistance, but not a lot of intense buying because a lot of guys don't want to chase. So that kind of gives you a combination of a market that tends to just drift higher. So we talked about Acacia Communications not selling into the bad news. A couple of people asked me, can they buy it in the 44s, 45s? I said, yeah, go small. This is the chart that I was looking at. It's a 1 year daily, and it's obviously been a horrible downtrend, but this is the kind of chart that is a long-term trend changer. In other words, it's such a subtle, slow grinding base. You're going to have some volatility, some ins and outs, but when you see big volume like this, one of the bigger volumes of the day, or I'm sorry, of the past couple of weeks, and you don't get a return to that point, it looks like you're trying to form some type of a range because you have a high here, a high close here, an open that couldn't hold, and now it would be nice to zoom in here, but now you have a good volume spike coming in to retest this little, trading area that we're in right here, this little rectangular consolidation period that goes back to April. So I'm sure we're above some moving averages. We can take a look at that, but this is typical of a stock that is this market is so short-term oriented with respect to earnings, and got a lot of guys are chasing performance. They don't want to be in the stocks that have turnaround stories, which I would say Acacia ACI falls into that category. This is a good sector to be in, but they're working through some inventory issues. There's some softness in China. Needless to say, if you are a momentum trader, these guys are going to come in and out. But from a longer term perspective, this is the kind of thing that slowly, methodically, right under your nose, starts to climb back up into the mid 50s. I'm telling you right now. So without further news, this thing is going to make a push into some other trading levels. I would consider the 56, 55 area another level. And then another other area of consolidation and congestion was around 64. So you don't think that's a big move, but percentage-wise, it's awesome. And considering where we were, I mean, this thing was above 120. Maybe it didn't deserve to be up there, but when you have technical damage like this, and then things kind of changed around fundamentally and psychologically and technically all together, it's an interesting area too, because you're coming into this base where you performed this little cup, you curled up, came down, retested this little base area around 48, 49. You're right back up there, and you're bumping it on high volume. So expect intraday volatility. This could certainly trade back down into the 46s, high 46s, 47s, but it's starting to form a longer term chart. If you look at the 1 year weekly and get rid of this volume, it's looking pretty constructive here. If you're not in it, this is something you just nibble and then you kind of add once you're in some clear areas, or you add on the pullback. But let's see how it plays out. It looks like it's starting to form some type of a directional change here. One more thing, and then we'll leave Acacia because I'm not really big in this stock, but I do hold a small position. I go in and out of it too, so it gives you the possibility to do that with these crazy moves, and it has some wild swings. But anyway, nice crossover. And then what I call a little bump and go, a little touch and go on the MACD. That's positive too. I like to see that. So I want to move on to Bidu and show you an interesting chart. So Bidu's been a stock that we've been in for a little while here. You can see the volatility. You'd have to have a seatbelt on or a strong stomach for this. Big wild moves. I mean, look at this. This looks like a clean breakout, and then you just come right back down and retest the pivot point here. Actually, just above it. You're getting moves from 192 down to 181. I mean, these are 10-point swings. So, if you're in BABA, just be aware that it's going to get a little crazy. If you're trying to trade it, you might, you might sell low and then try to chase it back high. Interesting thing on BABA though is if you look at the 5-year chart. So on weeklies, I'm okay with using tails and wicks. I don't like to, but we're just trying to get basic areas. You can use this pivot here. No matter how you look at this wedge is starting to break out from a longer term perspective. It's got a little more work to do, but interesting 5-year chart. I mean, we could even clean it up and remove some of these lines so you just get a basic idea of what I'm looking at. I think that was your trend changer in here where you came back down hard, but I mean, let's keep it simple here. We can get rid of that one. Common areas. I mean, this could have been a little bit of an overbought area, but when I say common areas, it means we touch this more along here than this little one outlier. And I went from the pivot point. So obviously you can do it this way, but you still come up with the same results. This shape is starting to change here. I know a lot of guys use horizontal resistance, but over a long period of time, if something's moving in an upward direction, I'm going to draw my lines in an upward pattern. If something was moving in a downward direction, I'm going to draw my lines in a downward pattern. So we're kind of breaking out of this wedge from a longer term perspective. It looks really interesting on Bidu, but you can see that even in your up moves, you've had some wild down moves. So there's certainly time to be patient.